Hey there, Darren Garman here, and I'm looking forward to talking to you about the mistake. So if you're a high net worth individual or you're a fund manager, here are the 3 big mistakes you want to avoid going into next year when it comes to investing in real estate syndication. First mistake is this: not vetting the GP or the sponsor. Okay, so you may be thinking, well, duh, Darren. I mean, of course I'm going to be doing that, but you'll be surprised how many don't, because they are so busy. They're so busy they don't. They, maybe get a word of recommendation many times from people that don't have experience with this kind of stuff. Oh yeah, I heard that Bill's kind of a good guy to kind of be aligned with, and he, you might want to give Bill a call. And do you have really any experience with Bill? Well, no, I don't personally. I just heard that you see what I mean? Or, I saw him on a podcast and he was talking some really good stuff, but I don't really know how. You see where I'm going? You've got to make sure you vet your GP and your sponsor. Dig into their track record. Dig into them in terms of what are they all about, okay? And it should not only be this, guys. You need to be digging into the management part of things with them too. And I mean, I'm not talking the asset management. Asset management, of course, is very important. I'm talking about the property management part of this. I find way too many GPs, way too many sponsors don't put enough time and effort and emphasis on property management. They want to get all the other things. You want to get the money raised, you want to get the asset management plan done, but property manager's like, well, God, now who are we going to have manage the property? We need to find somebody. I know that you might think I'm exaggerating a little bit there, but I promise you in a lot of cases I'm not. And let me ask you this question. What is the most important responsibility in owning a real estate investment? It's management. It's property management. Because it doesn't matter if it's well located, doesn't matter if it's well maintained, doesn't matter if it's a great, beautiful property overlooking a beautiful, you see where I'm going? If you don't get the management right, none of that matters. I've seen beautiful, terrific properties that just have worlds of potential go down the tubes because of bad management. Mistake number 1 you want to avoid, you want to make sure you vet your GP or your sponsor, and you ask serious probing questions on property management. Number 2. Now, number 2 has to do with place and to be contrarian. Okay? You want to be contrarian. Here's the mistake a lot of people make. A lot of investors make this mistake, and it's actually pretty simple. And that mistake is they do what everybody else is doing. They follow the crowd. Okay? I hear all these guys, they're investing in the Sun Belt. So I'm going to invest in the Sun Belt. Okay? Or these other guys, I hear a lot of those guys are investing in the Northwest. I'm going to invest in the Northwest. Why? Well, the crowd's going there. Well, the crowd's going there. Well, the crowd's going there. No, you want to be contrarian. Place matters. You want to be contrarian. Now, guys, I'm not saying that you invest in Alaska igloos that are being constructed and you're that contrarian. I mean, I'm exaggerating, of course, but you get my point. You don't want to be totally contrarian, but I want you to think about this. When it comes to place, what other places, what other markets, what other places that are contrarian to where the crowd's going can give me unconventional returns and unconventional benefits that not everybody is flocking to or running to, okay? Because you know the saying, if everybody's going one way, what do you usually want to be doing? You usually want to be going the other way. And so a big reason why a lot of investors join us here in the state of Iowa is because it's contrarian, okay? So if I'd come up to you on the street and I'd say, give me the top 5 places for great real estate syndications to invest in, Iowa's not going to come up on your list. It's not even going to be in the top 5, okay? And I know that. It's contrarian, okay? And by going in contrarian directions, I'm using Iowa and what we've got here just as an example, okay? It can produce unconventional results by being contrarian. So a mistake a lot of investors make when they look at getting involved in syndications, especially as we go into this year, or maybe we're into this year as you're watching this, is they don't think contrarian in place enough. They just want to follow the crowd. Okay, well, they're all investing there. That's where we're going to go. No. What other places can you look at that can give you the possibility, because it's contrarian, of unconventional results? Number 3 is unrealistic expectations. I see this way too much. Unrealistic expectation. Guys, have you ever seen a business plan that looks bad? Have you ever seen a pro forma that looks bad on paper? No, you haven't. Every time something is put in front of you, let's just call it pitched, every time something's pitched to you, is there a story on why it looks terrible? That's the story in general. And now, I'm not saying that that's not the story in a lot of cases. In a lot of cases, that can be the story. But always remember, what you're being shown and what you're being told in many ways can be unrealistic in terms of what really can happen, all right? So what do I mean by telling you this? This is something you inherently already know. So what do you do about it? You just keep it in mind. You don't have these unrealistic expectations as you go into that syndication. You have a little less emotion into the expectations, okay? You have a little less emotion than everybody else in terms of what can realistically happen, what to realistically expect. See what I mean? And a lot of that starts, guys, with unrealistic expectations as you go into that real estate syndication, okay? All right, so I've given you 3 big mistakes that I see after 30 years of doing it that I see that's going to be happening going into this year. And again, depending on where you're at, if you're already into the year, here are the 3 things that you want to avoid here, all right? Number 1, not vetting your GP or sponsor, not vetting them, digging into their track record, okay? And in addition to that, what is their property management plan? That is huge. It's so huge and no one ever really talks about it. It's big. Property management. Number 2 is place and being contrarian. We don't want to go to a place where they're developing igloos and we buy the igloos and that's our contrarian investment strategy. That's not it. But on the other hand, what other place can provide returns, can provide investment benefits that are unconventional, that the crowd isn't going, where you can be somewhat contrarian and have those kind of contrarian results, okay, to go along with it. And then number 3, unrealistic expectations. Guys, this is a biggie. You gotta have realistic expectations no matter what you're being told, what you're being pitched. Bring it down a few levels, okay? Have a little more less emotion into it and a little more emotional fitness into it, so to speak. And you'll find out that even though you're involved in that investment and it doesn't go as well as maybe what you were told or what you thought, you're going to be just fine and you're going to navigate it a heck of a lot better than if you go into it with all of those huge expectations. Okay, guys, I expect the coming year, or again, depending on when you're watching it this year, to be huge for real estate syndications, especially when it comes to properties like multifamily, self-storage, and yes, even office buildings, okay? I expect that to be huge. Just make sure, this is coming from a guy that's got over 30 years doing this, all right? Make sure you keep these 3 big mistakes in mind. Avoid them, and you're going to be so much better off, not only in terms of how you're going to scale your wealth, but how you're going to be doing with this emotionally as well. All right, look, if you got some value out of this information, out of this content, would love to hear from you. Would like to get your comments below. Subscribe to us too. That would be great. All right, take care. We'll see you. Bye-bye.